All right. Morning, everyone. I'll kick it off here. Okay. Okay. U.S. markets last night finally had a little bit of a correction, down about 0.75%, and just not a whole lot of leadership again. Not any real particular reason probably for a correction, but correction nonetheless. We've had some violence out of Iraq. Obviously, oil kind of pushing higher on the back of that. People worried about a supply constraint there, but not other than that. There wasn't a whole lot of bearish news out. Market data that's continued to come through has been more or less in line or better again, and except for the retail sales number that came out last night at zero point 0.3 versus expectations of zero point 0.6. So I think we're obviously looking to make a bit of a retracement on the back of a really overbought technical conditions, and like we said, a couple of days ago on the first little pullback that we had, I think this is the kind of correction that is still a correction that keeps the bulls happy, and they think it's healthy for this kind of correction. So just keep that in mind. It's not exactly an ugly sell-off. In Asia, we had a bit of a mixed action. We actually had the Shanghai index that pushed quite a bit higher earlier in the session, only to pull back to finish up less than 1%. But we had all sorts of things going on there. We've had a lot of stuff, in the market, a lot of stuff in the headlines about the property sector, and some of those guys moving to 100% financing on some of the properties there in the shadow banking system. Obviously, the index was led higher probably by the oil stocks and some of the data that was out overnight. But other than that, still just a lot of mixed news from the property sector there. We continue to see that news really weighing on the mining sector out of Australia again this morning. Rio Tinto and BHP probably more than anything following down on the back of us, but down again nonetheless. We also had the yen, which weakened out a little bit from last night. We were down about 101.60 at the end of the U.S. session. We weakened out a little bit there to kind of give the Nikkei a little bit of a boost. And I think some positive comments coming there. With making that change to the stimulus. So even though it's no surprise, I think it's still got the yen a touch weaker and buoyed the market there a little bit. All right, getting into corporate action. With Telkom out this morning, headline earnings per share looking a touch soft at 861, guidance for around 866, and revenue at 33.06. Expectations were also a touch higher than that. Divvy per share going to remain at 0. They made comments saying that intention is to reinstate the divvy in the 2015 fiscal year. So I would assume that was somewhat expected, but I think maybe a little bit of a negative overall for Telkom today. Don't forget, we've got a bunch of shares going ex-div today, not on Monday, but they're going ex-div today. That's ARLs, RLOs, MDCs, TONs, and MPCs. So there's a couple quite big divvies out there. So just keep that in mind if you're playing any of those shares today. Right. Looking at market data out on the day, we had Japanese industrial production this morning, which is a bit softer than prior numbers. The Chinese retail sales, the numbers we were talking about earlier, probably slightly buoying the market, a little bit better than expected. Industrial production coming in line. I think numbers that come in line in China now can give support there. We've got CPI numbers out of Germany and Spain. We've got the UK construction output. We've got trade balance out of the Eurozone at 11. And then later in the States, we've got PPI numbers, PPI final demand numbers, and University of Michigan confidence. All right, let's get into the maps. There actually wasn't a whole heck of a lot that happened yesterday. We will start out by looking at Anglos here on the local exchange. And let's just go into the 1 year, sorry. Okay, so Anglos, you can see we really popped below the 260 level yesterday. We opened below it and never looked back. I mean, we were trading weak the entire day. We put in this long piece of consolidation here between about 260 and 265, and we got that really basically just 5 rand a downside on the back of that yesterday. You know, we're still suffering the effects, I think, of dropping out of this head and shoulder pattern, which really is a target to take us right down to the bottom of this formation, which is about 246 if I'm not mistaken. So maybe a little bit more downside left to come in Anglos. That would still be above the price target that Goldman set there for 1280 and pence in London. So, you know, very realistic for this thing to pull all the way back to 246 after trying to break out only about three or 4 weeks ago. Right. We're going to look at Kumba as well, obviously a big piece of the Anglos earnings. For some reason, it held up much better than Anglos did yesterday, but definitely dropping some key support and really failing to push above 240 with any sort of significance. You can see there the prior day we popped up above 240, but it just couldn't get going when it should have been able to get going and at least fill the gap up here to 250. The fact that it couldn't get up to fill the gap at 250 and failed, I think, is also telling. And I mean, I think that this thing's got further downside. I think the setup right now is it's setting up to take out the recent lows and finally complete our target, which would run from the height of this channel here down about $50 on the breakout from 250, which would take us down to, from 350, which would take us down to 300. So I think that's coming on the cards now that Kumba was able to drop out of ascending triangle support yesterday. All right, we'll look at Woolworths. And Woolworths, we talked about this one yesterday. We showed this chart in the morning, and we showed that we were basically hanging right on to this broadening formation. We were hanging right on to resistance of that formation. And let's go back a little bit further. We'll look at a 2-year chart here. I mean, you can see we're at a very significant point. I mean, if you look at, sorry, I just drew that really badly. If you look at this level here, it's a very significant level here at $78, which we're 50 cents shy of at the moment. Stretching this all the way across, you can see there we basically had one day. Let's just double check on that. We have one day where we ever closed above 78. Or 2 days, sorry, because there's actually a little wick there. So we had 2 days where we closed above 78 ever in Woolly. So the 78 is a massive level. You can see we really rolled over the top right there. We topped out 2 times there back in May as well, or late April, and then coming up against it now. So I actually think that you can make an argument that 78 is a huge level here. Obviously, we know that we broke out of from the trend resistance here, about a month ago. But bottom line is, I think 78 is also a very, very significant level. And I think if we can pop through 78, I don't see any reason why we can't take this thing all the way up to about 84. So just keep that in mind. I think when we get above 78, and Woolies will probably be breaking out to new all-time highs. All right, we'll look at, staying on the retail theme, we'll have a look at Truworths real quick. And Truworths really, let's shorten this up. Truworths really setting up for a potential, it looks a bit like a bit of a head and shoulders here, maybe not quite classic. The shoulders are a bit small, but either way, you can see there very, very clearly that this could be a bit of a head and shoulder setup. And I think if we don't have very far to fall today, and we basically need to get below about 74, 75 for us to be able to drop out of what I would call this head and shoulder setup. Either way you look at it, it's bearish. I mean, otherwise we're looking at a continuation pattern here to drop below 75, and you can call this a bear flag. So I mean, you can look at this 3 different ways really, and you can show potential downside on the target here in Truworths, and it's really totally separated from a lot of the other retailers, especially the Fashinis of the world, and that have been doing. So keep that in mind. I mean, this thing drops 75. I really think that this thing, short term, will come down and probably test 72, but I don't see any reason why we can't come back down and test the lows. All right, the last one I'm going to show is SA Breweries. We're going to look at the London chart here. We're going to look at it on a 5-day. One of our guys put me onto this morning, and actually we've been consolidating here. We've bumped our heads over the last 2.5 days, literally several times right here at the 34 level, and we managed to pop up above that right at the very end of yesterday's session, and really setting us up to move higher. I mean, obviously, guys, this thing's been rallying on a rumor, and so it's one of those trades that becomes a little bit more difficult to kind of make. But the fact that we popped all the way up here, only to put in this consolidation for the last few days, and we're already breaking out of it to go higher, probably means that there's some sort of truth to the rumors, and that the market knows about it and is looking to take it higher. So just keep that in mind. Watch this thing today. Obviously 34.50, we triple topped up there a few sessions ago, or quadruple topped, or whichever way. Let's call it a quadruple top there. If we can get above 34.50, this thing's going to take off like a rocket. So just watch it really closely today. That's it for today, guys. Thanks a lot.